And now let's move on to the next step, and it's a special session by a special person who is the managing director and CEO of HDFC Securities Limited, and he is Mr. Dhiraj Relli. A distinguished career in the financial sector, Mr. Dhiraj Relli has led HDFC Securities to become one of the India's most trusted and innovative investment firm, empowering every Indian to become a part of India's growth story. Under his visionary leadership, HDFC Securities has consistently excelled in offering cutting-edge digital solutions and customer-centric services, transforming the way retail investors approach the stock market. Mr. Dhiraj Relli's expertise in fintech, investments, and market trends will bring a wealth of knowledge to our discussions. We look forward to his valuable insights on the intersection of finance and media in today's economy. So let's invite Mr. Dhiraj Relli onto the dais with a big round of applause. Yes.
First of all, Shankar, thank you for having me here. Shankar reached me out a few months ago when he was planning this South India Media Summit. He reached me out that would you like to participate in this event? I said happily I can participate, and especially I have flown from Mumbai today morning, straight from the airport. I'm here to give you some perspective on the capital markets and Indian economy. May not be so much on the media side. I'm sure each one of you are already an expert in the media space, but I will give you some perspective on the capital market. My job is very easy today because as I'm talking about the capital markets and Indian economy, the capital markets are doing very well. Sensex and Nifty are at all-time high level, and those who have been investing into the capital markets are already happy investors. They've made decent money in the last few years. Particularly post-COVID, we have seen the great returns in the capital market, so that way the investors are happy. And the big questions here today is that when we are at all-time high level, where do we stand? Are we doing well? Are there any exuberance in the market? Will market continues to perform here? What is the India growth story from here onwards? So let me take you through a few slides and talk about India and capital market. We are all familiar with the India growth story. I think we are well poised to continue to grow at 7% plus minus GDP, real GDP, and with 4 to 5% kind of inflation, the nominal growth will be around 11 to 12%. And this has been substantiated by various authorities, whether it is World Bank or and so many other players. My take is that even if we have some issues, we'll continue to grow at plus minus 7% as real GDP. And this is all driven with the aspirations of India, a large population. Mr. Vijay made my job very easy when he was talking about the India being a very diverse country and a young country with the median age of just about 28. We have demographic dividends in place in India. The aspiration levels are very high among the Indians. They are all yearning to do more. They are all looking forward to unleash their true potential, and particularly in the southern part of the India, we've seen that how with the help of literacy, education, and thrust on the technology, how we have unleashed our potential, and not only in India, but also Indians are present all over the world and taken the service industry, particularly IT service space, by a storm. So that's something defines India, and more so defines the southern India. So India growth story is here to stay. We will witness the robust growth in India. We'll also see the favorable macro environment, and you can see that if you look at all possible high frequency indicators, whether it is GST collections per month, the direct taxes, income taxes collections number that are growing, and also e-way bills or number of passengers traveling on the airlines and so on. I think all possible data points clearly substantiate that the macro environment is absolutely robust, and we are one of the fastest growing economy in the world, and for next decade or so we'll continue to remain the same as per Morgan Stanley's estimate the world's 25% incremental GDP growth is going to come from India. So which clearly means that no one in the world can afford not to include India as important market or important strategy for them. So that's something very, very amazing. And similarly, like what one of the panelists was saying, that India, southern states contribute about 35 to 40% of the GDP, and anybody who is doing business in India cannot afford to miss south or not to focus on the southern market. So similar way, I think I can tell you all possible boardrooms in the world are having discussion about how they can approach India as a market for next 20 odd years, and how they can make most out of their growth. So it's part of the board strategy everywhere. And I think one piece where we have been struggling is manufacturing. We've taken a leap in last 3 decades in service sector side, but manufacturing is one area where we have not been able to contribute. China has taken a leap there, and they could able to become the factory of the world. We have been the office of the world, but China has been the factory of the world. In last 10 years, government has taken many initiatives, whether it is PLI or Atmanirbhar Bharat and many other initiatives. I think we are at an inflection point where from here onwards, for next 2-3 decades, we will see emergence of manufacturing big time in India. We are already seeing Apple manufacturing in India, Samsung manufacturing in India, and many large players, engineering players are manufacturing in India. I think in 2014, we were importing almost 95% of our electronics from the China or other countries. Now we are exporting electronics to the other countries. One area where we are still struggling in terms of our imports is that we have a huge dependence on the crude oil. Almost 85% of our requirement is something we import, and that's where also, if you see, there has been tremendous focus from the government to work on an energy transition. So energy transition through renewables or green or electric vehicles will be a very big theme, and I am sure that in next 15-20 years we will be able to reduce dependence on the fossil fuels, and we will go for a green energy big time. So that energy transition theme will also play out in India. Moving on, I have put some statistics to give you a perspective on where we are in India. Dhiraj spoke about that India is a country about 1.4 billion people. I'll give you some more data points so that you can get perspective where we are. The deposits are about 213 lakh crore. Mutual fund industry has grown significantly. Now it's about 66 lakhs crore in terms of AUMs, and we have about 17 crore demat holders in India. We've seen the emergence and participation from the retail investors, institutional investors, and it is growing at a rapid pace. So the data clearly speaks volume about how we have adopted the technology. Jandhan Trinity, Jandhan, Aadhaar, Mobility Trinity has played a very big role in democratizing the India as a very large market. The access to market earlier was confined to only few select individuals. There was an information arbitrage also available with the select individuals who had access to the information. I think with the advent of social media and access through the mobile phones, now the information is democratized, and the more and more information and at the same information is available at the same time, at same frequency to all investors, whether they are small investors or they are large investors. So these slides talk about that, what kind of potential we have in India, and a long way to still go in terms of penetration in the capital market and financialization of savings. Historically, India has been investing largely into the physical assets, whether it is in the real estate or in the gold. In fact, we own in India about $2.5 trillion gold in households alone, which is much higher than the gold owned by the many central banks in the world also. So that way, earlier we used to say India is sone ki chidiya. I think that fascination to the gold or buying gold related products is still continuing, and that is making India as rich also today. Gold prices are also at all-time high levels, and with the kind of liquidity we are seeing, I think the gold will continue to do well also. So this was just about some numbers. Yeah. So to beat inflation, you can only beat the inflation in long term with the help of capital markets, stock market, and also with the help of gold. So that way, to this extent, I think Indians who've been investing liberally in the gold as an asset class are, I think, doing a great work. The households, without realizing the potential, or probably they were aware that the commodity is scarce and it will continue to grow, they've been investing in this space. However, real estate is something do not outperform the inflation in the long run, and certain fixed instrument also have their own challenges in terms of long term beating the inflation. So capital markets is the very apt method to beat the inflation in the long run. We've seen the emergence of retail investors. The slides talk about how the number of retail investors are growing significantly in the market. We are close to 4 crore investors, unique investors who are actively trading on the National Stock Exchange. There are about 17 crore demat accounts and a long way to go still to penetrate. As I mentioned, that we are seeing the financialization of savings from physical assets to now financial assets, but still a long way to go to allocate more and more into the capital market. And I think capital market will also be a great source of funds for all the entrepreneurs also. We are already seeing a slew of IPOs raising money, risk capital through the capital markets. And I think there are huge opportunities for entrepreneurs to raise capital through the capital markets, both on the main board and also as a SME board also. So there is a separate section of in NSE and BSE both, where small and medium enterprises can also raise risk capital and list their stocks. So moving on, some more data points. I think most of the data points I have already covered in, but we will continue to do well in the financialization of savings. There is another term I want to introduce you to with. That's something called equitization of the savings. Earlier, investors were largely investing in real estate and gold. Then they started to invest in the fixed deposits. We see that there are 213 lakh crore kind of total fixed deposits and liabilities with the all scheduled commercial banks and small finance bank, whereas mutual fund AUM is just about 66 lakh crore. If you look at the global mutual fund industry, it is always a few multiples of the GDP, whereas in India it's just about 25% of the GDP or so. So which clearly means that there is more scope for financialization of savings, and also within the financialization of the savings there is an opportunity of equitization of savings. This is something I have coined as a term. We have seen that the investors now are educated and have an access to the information and access to the platforms to invest into capital markets through either direct equity route or through the mutual fund route. This chart shows that how the SIPs have been growing. The major issue always retail investors who come across is how to navigate the volatility in the market, timing in the market. I think SIPs is a wonderful instrument to navigate the volatility in the market. You can, whatever sum you can spare on a monthly basis, you can put it in a systematic investment plan, and that will take care of your volatility, because you will enter in the markets at a different price points and different levels, and that will help you to deal with the volatility in the market, and you don't need to worry about the timing in the market. Today we are seeing about 23,000 odd crore getting invested through mutual fund SIP route every month, and this number has been growing at 2% per month CAGR, almost 25% compounded annual growth rate on a yearly basis. So if we extrapolate this compounding, by January 2028 this number will be 50,000 crore, and by December 2030 this number will be 1 lakh crore per month. So that's the kind of opportunity or growth potential is there in this, and this is the by far the best way to invest in the capital markets. If you are simply paranoid about the timing about the market or volatility in the market, SIPs is the one route you can use. Depending upon your appetite, you can have multiple SIPs also, and you can do weekly SIP, you can do daily SIP, you can do monthly SIP. There are multiple routes are available, and these are very easy to set up. Once you set up, it's an automated debit facility from your account, and you don't need to do every month any incremental effort here. Yep. So access to the information, since we are talking about the media summit, I think the social media as well as the print media and electronic media have played a critical role, and also many influencers have done great job in democratization of the financial instruments, more so about the equities, mutual funds and direct equities. As I mentioned few minutes ago, that this has paved way for the retail investor to get the access to the information. So there are opportunities in almost all possible sector. I have mentioned only about consumer sector, technology sector, healthcare and IPO. I think defense, PSUs, manufacturing are also doing equally well in India, and they will continue to do well. Bottom-up stock picking is something we specialize. So in case you need any help how to construct your portfolio at HDFC Securities, we can help you with that. Other than this, there are also avenues available to de-risk from the country India level. You can invest in a global investing product. We do offer a global investing platform whereby your experience to purchase whether a share listed in Indian stock market or a share listed in US stock market is absolutely same. So you can, if you are a user of Netflix or Amazon or Meta, which is Facebook, and you want to participate in their growth story, and particularly on a semiconductor side where or a AI side where are less in number of companies that are listed in India, there are opportunities available, so one can explore the global investing platform also. So in short, I think the India growth story is intact and will remain to do well. We will continue to contribute 25% of the world's GDP in next 20 years. That way India will always remain attractive market for everyone. We will see more and more risk capital in the form of FDIs, FPIs coming into the Indian markets, and with retail investors, with HNIs participating in capital market, we have a really bright future ahead for India and the capital market ecosystem. I'll take a pause here and take few questions if you have any questions. I've already heard the bell, so I'm happy to answer any question. Okay, I think I have done a great job in terms of disseminating all the information. You have absorbed all the information. You understood that the Indian growth story is here to stay for long, and financialization of savings will also prosper. Yeah.
Sir, hi sir, your presentation was very nice. My query here is, what is the percentage of investment individual can invest from his salary for SAP?
Good question. I think it depends upon your appetite, how much you can save, but the best method for you to first allocate that this much percentage I want to save and invest, and then spend rest of the money. That could be 30% for someone, that could be 20% for someone, could be 50% for someone. As you have a higher income, you can actually spend, you can actually allocate more for the investments also, because your small fraction of your salary would be sufficient to meet your basic needs.
Okay, thank you, thank you.
Thank you. Thank you so much. Thank you for having me here, Shankar. Thank you very much.
Thank you, Mr. Dhiraj, and please be on the stage, and I would like to invite Ms. Shalmali from Tata Play onto the stage to present him a memento as a token of love.